Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. Let's talk about the Bitcoin correction. Is it over? And here is a chart just depicting the 3 Bitcoin corrections that we've seen this year over here. So minus 31% in January, minus 26% in February, and now minus 18% potentially. So let's talk about a few things that we see recurring in these corrections and how do they exactly bottom. So first of all, we always see a long downside wick towards the downside. It's sometimes long. In this case, it wasn't too long. A long downside wick means slowing in the sell side momentum in a sense that we have seller exhaustion. Sellers can't sell anymore after consistent days of sell side price action. And essentially the long downside wick not only showcases the seller exhaustion, but the aggressive buyback from buyers. So this long downside wick is really important to that. So once we have that long downside wick, we have a strong initial reaction, as is the case once seller exhaustion hits and buyback is aggressive. We see that really strong initial reaction right over here. And the initial reaction here has been fantastic as well in this correction, but it's been great as well right over here. So after we see the long downside wick, after we see that initial strong reaction, we enter a 4-day consolidation period right over here. So essentially the orange box right over here showcases this entire bottoming out period for retraces right over here and here as well, but the red box inside these orange periods showcase the 4-day accumulation range, the 4-day consolidation range, where we see altcoins perform quite nicely, but Bitcoin essentially consolidate right over here as well. You can see consolidation over here, even though you see long upside wicks towards the upside and even downside wicks as well. It's quite a volatile consolidation range, and this is essentially what I was looking for right over here for Bitcoin, but we'll get to that in a second. So in any case, a consolidation range before we form a second low, but this low is going to be a higher low relative to the first low. So first of all, long downside wick, initial strong rally, 4-day consolidation period before we actually break down from this consolidation period, or at least wick down below it to form a second low, which forms a higher low. So in this case, long downside wick, initial rally, and nice recovery. Consolidation period, downside wick to form a second low, right? A higher low right over here. And essentially that's essentially what I was looking for in this period right over here. But what we're going to be watching for, what we should be watching for here in any case, is these consolidation ranges are quite volatile towards the upside. You can see that even here as well. So this isn't necessarily out of the ordinary. It could be, of course, it could be that this consolidation range is over, but I just want to see how Bitcoin deals with this resistance area right over here, because it could be a wick before pulling back to form a higher low. You know, that is a possibility, but we are currently in a resistance period at the moment, and this is best evidenced by this resistance here. This orange area is the main resistance that Bitcoin needs to breach in order to revisit its all-time high region. So these are the FOMOers getting trapped in their positions and then having price get rejected towards the downside. So this is an area to contend with at the moment, and it's going to be very important in the scheme of this comparison, let's say, how Bitcoin behaves right over here. Because if it rejects in this particular resistance area that we're talking about right now, if it rejects here, then we'll see a bit of a pullback from there. So really important to see how we deal with this resistance area. Is it going to end as a long upside wick like we saw before? But of course, this is a solid daily candle, so this is very close to actually confirming that the correction is over after an 18% retrace. And one of the interesting things here is that this was a 31% retrace, this was a 26% retrace, and this was an 18% retrace. So we're actually seeing declining sell side pressure in each of these retraces. We're seeing the retraces get shallow and shallow. The retraces are getting shallower and shallower over time throughout this quarter. So that's an interesting thing to bear in mind. because the sellers aren't that eager. The people who are actually more eager are the buyers who are really stepping in to buy back Bitcoin. And in fact, we saw a consolidation range here and a higher low, consolidation range here and higher low, but still not as perfect here, right? Because this was kind of a double bottom in many ways, essentially a range, but you're seeing similar ranging, similar structure, but still the higher low is at a higher inflection point. The degree angle of this higher low is much sharper compared to here, and in this case we might not even get a higher low. So you're seeing that not only are the retraces getting shallower, but we're also seeing the buyback be incredibly strong and more decisive. So interesting to see that from Bitcoin. This is the resistance area to watch in the short term, and in the more weekly time frame, this is the resistance area to watch out for. This lower high diagonal resistance confluent with the 59,000 horizontal resistance. So this is a confluent resistance area that we need to breach for Bitcoin to be able to rally to new all-time highs, essentially, because once it breaks this region, then we're not going to have much resistance before a new all-time high. So at the moment, we are just below this resistance area, the resistance area that rejected price over here. But look at how the long downside wicks are slowing. In the sell side momentum, you're seeing slowing before a curl up. Lots of sell side exhaustion here in these long downside wicks, and a nice curl up to this resistance area, break past here. So essentially speaking, I'm going to be watching for a weekly close later this week, followed by a test of support of 59,000. Should we get that, then we're going to see a new all-time high in Bitcoin's price action, and the correction will be fully confirmed to be over. At the moment, it's really looking good in terms of confirming that bottom. There is a slight possibility for a second high, for a higher low to happen, but at this point, if we break past this resistance, then that's all the confirmation you need, essentially, and turning this 59,000 area into support would be fantastic as well. And having said that, guys, that's about it for today's video update, but let's dive into today's sponsored review of energy. Awesome. Thanks so much for joining me in this segment of the episode where we're going to be focusing on a sponsored review of the decentralized exchange and automated market maker that is EnergySwap. So we're going to be focusing on EnergySwap in this video, but I also want to give you guys a brief review of energy as a cryptocurrency overall. And of course, we've covered energy on this channel before, but in a nutshell, energy is a self-funded cryptocurrency project, a blockchain protocol which melds together two of the most successful pieces when it comes to blockchain protocol. On the one hand, you have the self-funded treasury model that was inspired by the Dash protocol. And it's interesting because energy has since grown into one of the largest treasury models in the space, often eclipsing the treasury model of Dash and the revenue generated by this treasury model. So the self-funded treasury model is one of those successful aspects that energy incorporates into its own blockchain protocol. But on the other hand, you also have the smart contracts platform of Ethereum. And at the same time, you have very low transaction fees, which are actually very close to zero. So that's energy in a nutshell. Today, we're going to be focusing on the EnergySwap platform, which is a decentralized exchange and a native automated market maker, which is very similar to Uniswap. But of course, the difference here is that EnergySwap is built on the Energy blockchain, which allows you to seamlessly swap between different assets. And compared to Uniswap, which is actually built on Ethereum, on Uniswap you have very high gas fees. It's incredibly expensive to trade and swap on there, but also you have long settlement times. And when we compare this to EnergySwap on the Energy blockchain, the fees are extremely low, very close to zero, and it's a very seamless experience. Not only a seamless one, but also a simple one to just swap in and out of assets on the Energy blockchain on EnergySwap. So essentially, EnergySwap allows us to port over these different assets from the Ethereum blockchain over to Energy blockchain, where we can just easily swap in and out of those native as well as non-native assets. And this is one of the real claims to fame, so to speak, for EnergySwap. The fees are extremely low compared to what we see on Uniswap. The gas fees on Uniswap can reach up to $50 or even more sometimes. And there are long settlement times on Uniswap because, of course, Uniswap is built on Ethereum. But when it comes to energy swap, these transaction fees are extremely low and actually close to zero. So that's one of the main things to mention here. Not only the low fees, but we're also going to be talking about the simplicity and the user interface, which is very intuitive when using energy swap. And we'll dive into that right now. So here's the energy swap platform. We're going to be talking about the swap pool and analytics features here. But just to give you a brief overview here, it's very seamless, very intuitive, in fact, that allows for seamless swapping between assets. And of course, NRG is probably going to be the native token that you'll be using here should you use this platform. Of course, it is the native token that people will be swapping in and out of, so you can try to swap from NRG to a variety of tokens. So you can select your token here, and of course, like I mentioned before, these can be native tokens from the Ethereum platform, but they can also be non-native tokens. So there's a variety of different tokens on this energy swap platform, and you'll be able to swap in and out of them. But of course, there are liquidity differences here across these different assets. But what we need to mention here is the slippage tolerance. But when we compare energy swap to Uniswap, we're actually going to see a major difference in not only the gas fees, but also the slippage and the liquidity. And of course, energy swap is still a very young platform, so the liquidity differences are going to be quite vast here comparing to Uniswap. But what we need to bear in mind is that even though that this is a young platform, it's still very promising because already you can have quite low slippage, and not to mention that, but also low fees as well. And as we start to see energy swap increase the liquidity here on the platform, you'll notice that it'll be very likely that these fees could even go lower and the slippage could go lower as well. And the fact that we see non-native as well as native tokens here on energy swap showcases the general vision that Energy has going forward. Energy swap wants to have a variety of different assets, and that's, of course, synthetics are one part of that, and potentially trading gold and silver and stocks. But we're also seeing cross-asset pollination here in a variety of different tokens from different blockchain protocols, whether they're native or non-native. But let's have a look here at the pool feature. You can add liquidity here, and you can do that by connecting your wallet just to view your liquidity. But overall, you can be adding liquidity based on the assets that you have already. But what I want to focus on here is the analytics feature. You can see how much liquidity here is on energy swap, and you can see that there is an inclining tendency overall over time. The liquidity is increasing over time, so more people are going to be using it and contributing their liquidity to energy swap. But you can also see the 24-hour volume here to the right hand side on a daily or weekly time frame. And of course, the top tokens that are being traded here, of course, the native token energy here on an energy blockchain is number one in terms of liquidity and volume. But you can sort this out. You can sort these analytics based on liquidity and volume in the 24 hours, and you can see that generally, yes, energy is number one, but you see a wide variety of different tokens here. Like I mentioned, whether they're native or non-native. For instance, Cardano here is number 10, so the liquidity is quite low. That's probably because Energy Swap is a young platform at the moment, but you can see how this is still a non-native token here. So that cross-chain pollination is already here, and you can clearly see that Energy is taking steps to making sure that cross-asset, cross-chain pollination is occurring. But generally speaking, native and non-native assets are here, and there's a wide variety of these tokens that you can sort through and trade, and also just to understand the liquidity here, which will be growing over time. And you also have a DeFi support section, and overall here you can just check out the mainnet, check out the testnet just to test out Energy Swap, to connect your wallet, just to try and understand how it fits and suits you. It's worth checking out, especially on testnet, just to give yourself an idea as to what to expect and how the functionality works. It's very seamless in terms of the actual swapping capability, but it's also intuitive to use. Only a few buttons really, so you can't go wrong. But I understand that testing it out on the testnet can prove very insightful and valuable for first-time users. So definitely try and test it out on the testnet. But of course, still, the mainnet is live. It's already out there and you can try and test out Energy Swap there as well. But overall, Energy Swap here has low fees compared to Uniswap, and you can easily port over traditional smart contracts and projects from Ethereum onto the Energy blockchain for a more scalable blockchain solution overall. Because on the Ethereum blockchain, you're already seeing high gas fees, long settlement times, and this is something that you won't see on Energy Swap because we're also seeing liquidity increase over time. Over the past few days and weeks, we're seeing an inclining tendency in liquidity here on Energy Swap. So over time, it's going to become a more scalable solution, which offers low fees, low slippage, and that's something really to get excited about. You can already test this out on testnet or on mainnet, but generally speaking, a wide variety of different tokens can be swapped in and out of using the native token Energy here on Energy Swap. Really interesting that we're seeing a lot of cross-chain assets here that you can swap in and out of. So really, Energy Swap is trying to become a one-stop shop for different types of blockchains, different types of assets, native and non-native, but also the venture into synthetics is also on the horizon. Something to get excited about, implementing gold and silver, as well as derivatives and even stocks in the future. And having said that, that's about it for today's sponsored review about Energy. So definitely check out Energy Swap and feel free to let me know what you think of the platform in the comments down below. I'll leave all the relevant links in the description down below. And having said that, that's about it for today's video. I'm Rekt Capital and I'll speak to you in the next one. Speak to you soon.